Good evening, everyone. This is CA Pal Chauhan, and I welcome everyone to the webinar, which is conducted by Aggregation of CA Firm Committee on the topic Growth and Strategy for Small and Medium Practicing Firm, which is a much awaited topic for young people, young members who started our practice. And it is my honor to welcome the chairman of the committee, CA Satish Kumar Gupta, sir. And if I tell a bit about him, I know the words are not enough to describe about him, but still, he's the chairman of the aggregation of CA Firm Committee and International Taxation Committee of Institute of Chartered Accountant of India. In addition to this role, he is also the vice chairman of Board of Studies Academic for the current year. I know it will take time, but for just few seconds, he's also served as the chairman of the Continuing Professional Education Committee, chairman of UDIN Directorate, and vice chairman of the committee for the member in practice of ICAI during the tenure 25-26. So, sir, a heartfelt welcome to this webinar, and we are obliged that you organize these webinars for us. Then in next, I also welcome the Vice Chairman of the committee, CA Sanjay Kumar Agrawal, sir. Welcome, sir. He is in practice since 1986 and he's a Central Council member of the Institute of Chartered Accountant of India. Again, the words are very few to describe the whole profile, but still, for the council year 25-26, he was the chairman of the International Taxation Committee and Committee for Aggregation of CA Firm and the vice chairman of the Research Committee. So, I welcome you, sir.
Thank you. Thank you. Thank you, Payal. Thanks a lot. Thank you.
Now,
I think, yeah, please. Do you want to say something? Okay, Payal.
Sir, okay. I just wanted to welcome our speaker also.
Yeah. Please continue.
CA Hinesh, yes, Sir Doshi, sir. And if I talk about sir, he's a fellow member of Institute of Chartered Accountant of India, qualified in the year 1989 with over 3 decades of experience in taxation and regulatory matters. His expertise is FEMA, international taxation, transfer pricing, DTA, and advisory inbound and outbound investment. He has extensive experience in advising on cross-border transaction and regulatory framework applicable to foreign investment in India and Indian investment abroad. So before we start our webinar, thank you very much, sir, for enlightening us on the very important topic.
Thank you. It's my privilege and highly obliged to the chairman, vice chairman, Preeti Savla, to give me this opportunity. Thank you very much, everybody. Yeah.
So let me have this opportunity to introduce my sister here, Preeti Ben. She is a very senior council member, hails from Mumbai, the commercial capital of our country. And she is very dynamic leader. She is a very dynamic professional working from front. And we have seen him working in several committees, but sustainability is very near to her heart. And I think she is going to do wonders in the time to come for the profession and fraternity. To welcome Prithivan in today's our meeting. Thank you very much. Thanks a lot. So let me also welcome my vice chairman, to whom our council says Guruji. I say Jagat Guru Shankaracharya. He is the vice chairman of my committee, this aggregation committee of CA firms. And he's not only by name Jagat Guru, he's in mean Jagat Guru. He is so talented, so intelligent, and so active, rather proactive for the profession and for the fraternity. She's always with the profession, she's always with the members, he's always with the fraternity, and in him we have seen a great leader, and in times to come we will see that he is leading from the front to the entire Institute of Chartered Accountants of India. I also welcome again Preeti Ben, who is our respected council member, and I just told you that she is also a very good leader and working from front. I also welcome Sri Hinesh Doshi ji, learned speaker of the day. Sir, I would, if you remember 2020 IPL is going here in India. So there is a concept of impact player. You are impact player today, sir.
Hey.
Because earlier in the original schedule, Sanjay sir was to speak, but since council is going on and a very important topic is going on, so it was not possible for us to spare the entire 2 hours for him. So that's why I requested Parul that please request Ines sir. And and I'm thankful, really heart, thanks from the heart, sir. You just accepted our request and came here despite this busy schedule. And I can understand, sir. And I came to know that you are also dealing in the DTAA and international taxation also. So I'm also leading that, heading that chairman, that committee also this year. I would talk to different and next time, sir, for that. But I will definitely give you some trouble that how can we carry that that particular committee also. And CA Payal Chauhan, moderator of this particular webinar. And my dear friends, professional friends who in a very, very big number are attending this webinar, as I am aware that Purnima is saying me, more than 500 members have joined this webinar. So this is something very, very good sign that for our profession and for this committee, 538, for this committee of aggregation for CA firms. So really, and friends, I should start that. This is the hard work of our Guruji, Sanjay sir, of last 2 years. What he has framed about the profession, what he has visualized that how we can go ahead to the vision of our Prime Minister Narendra Modi ji to give the government meaning not only 100 but more than 100, but still we can start this year the 10-20 firms we can give to our honorable Prime Minister what he is desiring from the profession. So friends, I would simply say a few things that aggregation is need of the hour. If you are having a focus of auditing, if you are a focus of consulting, so the only answer is the aggregation. And you don't worry, we have 6 models. One original model we all know. You can enter as much as partners in your firm or in your LLP. So that is also one form of the aggregation. But apart from this, we have 6 models in our committee, which the members can use according to their wish, according to their circumstances. We have networking model, we have merger and demerger model, and we have that foreign firm networking model. We have thereafter corporate form of practice. We have that MDP, and we have one merger the aggregation of LLP firms, which is the child of Sanjay sir. So we have 6 these models having different characteristics. So if you wish to aggregate, if you wish to expand the nomenclature of your firm, if you want to achieve the best of the profession, then you can think of any one of these models. You just go to our site of the committee, just have a copy of all these models, go through them, and thereafter take a decision that which model you want to adopt. Today, our speaker, Sanjay sir, will also speak for a few minutes, and Hinesh Doshi ji would definitely make you clear that what model stands for what circumstances. You can adopt from them also. They will also going to tell you that what are the plus advantage and what are the disadvantage of the particular model. But believe me, now if you love your firm, you can go for aggregation. If you love the empanelment, you can go for aggregation. So at our institute, we have taken care of all your wishes. Whatever wish you have, yes, some things are beyond our control. We cannot compel the government, compel the CAG, CNDG, we cannot compel the Reserve Bank of India that they give us an opportunity after merger. But we are trying our best that how can those empaneling authorities just start accepting the aggregation. We are working on them, but otherwise, Institute is working a lot, working very hard that how we can achieve the vision of our Prime Minister, vision of our Jagat Guru Shankaracharya ji, Sanjay Bhai, so we can give our country as many as big firms for that goes to the service of the profession, not only in this country but beyond the country. We have one Setu model also, my dear friends. Setu means we are coming up with a networking portals, which name is Setu, where every member can post his wishes that I want some work, he can post there. Or if some big firms have some requirement of any chartered accountant working anywhere, they can also post their want, we want chartered accountant services at this place for this work. So this portal is we are going to release very soon. I think the Parul was saying 1st July, but we are trying that even before 1st July, we can go with that particular Setu. Thereafter, friends, we invite you to organize networking summit at your place. You just request your branch leaders that they send a communication to the committee to organize a networking summit or networking mela at your place, where we will organize all the things, all the infrastructure. And I think after that mela, you will understand what the aggregation is. So nothing much, friends. And we are also going to form a group of experts to further analyze all these 6 models. So not much. I would request Sanjay Bhai to take the charge. Pritiban, I would request Pritiban first to speak something because she is here. So I think we will be blessed by her deliberation.
Very respected Chairman C. Satish Kumar Gupta, respected Vice Chairman and immediately previous Chairman of the committee C. Sanjay Kumar Agarwal, Parul and entire team, learned speakers, Hinesh Doshi, Payal, moderator, and all my dear friends. I know you are eagerly waiting to understand how to grow our small and medium practices and take to the next level. And I am sure the way in which and the dedication and the work which Sanjay Bhai is doing, Satish Bhai is doing, along with the support of Sanjay Bhai, I am sure the dream to come true is not far. Modi ji's dream to have 10 large Indian firms, and this is how this entire year, the committee is going to take up with whatever models it have been developed in this committee, as well as the networking summits and the meets, which practical way the things are going to happen, and the Setu portal, which will give added advantage to actually network in the different regional areas and international boundaries also. I'm sure the members will have the benefit in the profession. With these words, I really welcome all of you and thank Satish Bhai for giving this opportunity to speak, to share my words of wisdom to all of you. So thank you very much, Satish Bhai and Sanjay Bhai. Over to you.
Yes,
So thank you very much, Chairman, for giving me a new name as Guru Shankaracharya. But I'm obliged for your all words of appreciation. Let me tell you, friends, because everyone wants to grow. But the thing is this, for growing, the important is this, that you have to sacrifice first. So if you have an appetite to sacrifice something little bit, then you are the right person. So if you want to aggregate, then you have to become a leader also. So if you are a leader, then it means aggregation is for you. Sacrifice, leader, then you should have people around you, maybe partner, maybe employees, maybe your associates, maybe your peers, those who are there for your vision, and you should have a long vision. Thinking only is not the end. The implementation, as well as you have to draw the map. Then the growth, which is the most important, because unless until you earn, you will not be able to sustain it. Then there are inorganic developments which are there. There are organic, there are technological, there are so many things you have to think about it. You have to also think when to take a partner, when to take an associate. So these are the various questions which our speakers will tell in detail, and we'll come back. We will take your question answer. At present, the speaker will give you some brief background, and we will give you the answers of your all question, your all queries. So please do write to us immediately. We have given you chat box. We have given you the details as to where you have to send your queries. Thank you very much. Thank you, Payal, for moderating the session and holding out our members, which have joined in large numbers. Thank you. Over to Payal.
You're on mute.
Unmute. Unmute karo Payal.
Thank you very much, sir. Sir, now I welcome our speaker of the day, CA Hidetoshi, sir. And sir, now the entire webinar is yours, and we are eagerly waiting for your words of wisdom.
Thank you. I'll just share the file. Somebody. I hope the slide is visible to everyone. Payal, can you confirm?
Yes, sir.
Yes, sir.
Yeah, thank you. Thank you very much. Thank you, Satish Kumar Gupta ji. Again, my guru also, Sanjay Kumar Agarwal, with whom I've been in the committee for 2 years. Preeti Ben is like our mentor and like a godmother to all professionals in Mumbai. Anybody has problem, she is there for everything. So thank you, Preeti Ben, for being doing that role in Mumbai, and blessed. And I'm more like a night watchman today, not the best player, but night watchman job is to, in cricket, just to
Sir,
hold on to the play.
Impact player, please batting on, do only batting. Rest of the work will be done by Sanjay bhai again.
Yeah, exactly. So I'm more a night watchman waiting for the star player to come. Until that time, I'm going to hold on to the reins and keep the seminar going. With my very brief presence in the committee, very impactful presence of Sanjay Kumar Agarwal ji for 2 years. He has withstand. He has done lot of 4s and 6s, scored centuries, and because of that, we are seeing light of the day. So many options, as he mentioned, 6 options the committee has given. It started with 1, 2, 3, 4, and now 6. I think they are doing everything what is possible, everything what needs to be done to get to the very near to the dream of our beloved Prime Minister Modi ji. And he wants 10 Indian CA firm with at least 50 partners, 500 employees, 500 to 1,000 employees. And this is what is the dream. And the dream started because it was told to him that the government spends 30,000 crores to large firms as consulting fee, and none of the Indian firms qualify or get this slice of the cake. And that's the beginning of the discussion, that why only large firms dominate this sector, and the fees of 30,000 crore, which only government and PSUs are paying, should not be given to Indian CA firm. And that's how the whole process started. With the Institute, Ministry of Corporate Affairs, the committee is formed in the Institute. The Institute has done a great job. And I think every week or every fortnight, the meetings were taking place. They were reporting to the committee also on a regular basis. And it's purely the zeal, enthusiasm of the chairman, Mr. Agarwal, and other committee members that we are seeing where we are. No doubt there is a lot of unfinished agenda, a lot of work to be done, but we are at a very, very advanced stage where I think a lot of data is available. lot of rules are framed, and now only a takeoff is required. We are at the last speed of the runway. I think a simply takeoff is needed, which is almost on the verge of flying. So with this, I think that the topic is growth strategies for small and medium practicing firms. The whole idea is focused today for small and medium firms who should collaborate, who should be together. And just a simple statistics which I can brief you, all of you, that today, if you can guess out of about 1 lakh plus CA firms, 74% roughly are sole proprietor firms in India, and firms or individuals who practice as a sole proprietor in the sense in their own personal name. Right? Somebody has, say, for example, example, Hinesh R. Doshi and company sole proprietor, or Hinesh Doshi. So this category is almost 74% out of 103 or 104,000 firms as on October 25. Next category are partnership firms with between 2 to 5 partners. They are maximum roughly around 25,000, 24,000 plus, 25,000 roughly. Partnership firm with 2 to 5 partners, and firms with more than 6 are hardly 2,000 firms in India, which is too low. Or I mean, there is and most of these even large firms with 6 plus, they all have maybe having their individual firm. They all would be having their individual practice. They may also be doing work individually. So as such, they are doing a dual practice. One, they come together for large corporate assignment or say PSU work or other banking assignment. But when it comes to individual practitioners for their clients, they are again individual. They practice in their own proprietor firm name, which is not what is a long-term, you can say, commitment towards the profession, not what the Prime Minister office wants it. They want 10 large Indian CA firm and with a network, alliance, whatever you call it, but you should be all together to project and get work. So with the topic coming here, I mean, just to say that if you are in that 74% category and not the 2% category, which are the partnership firms with 6 plus partners, I think this seminar is for you. Today, we are going to touch only the tip of the iceberg because I don't want to go into the nitty-gritty of the system or the process or what is possible, because I think first 10 slides are more important for you, that why you should merge. Once you are into that phase, it's more a roller coaster ride where everything is very simple, because this is the most difficult part. Taking the first 3 or 4 steps are the most difficult thing. Once you have taken the 3rd and 4th step, I think you will climb the mountain. You may go on the other side very easily. And wherever you are facing problem, I think the committee is ever dynamic to take over all issues, any practical problems, and they are there to see that the rules are amended, the relaxation is given, or issues are resolved. I think
it is a majority of document that prepared next go ahead. The few things we need to take care of, whatever decision we take today, it should be realistic, sir. If you take
can I continue? Yeah, okay. So basically the committee is so ever dynamic that every issue coming up before them, I have seen in last 2 years, everything is discussed, resolved, and seen that benefits are given to see that the ultimate goal of aggregation is achieved. And this is my personal observation, which I witnessed myself. So coming back to the first slide, I mean, why? Yeah. Coming to the first slide, why should we merge? Unlocking growth imperatives for CA firm, and what is the whole idea why we intend to be together, right? So first is cost. I mean, as a chartered accountant, we all know why we should be together as a group. We have a cooperative society where we are living, right? So same thing here. We are a group of chartered accountants who would like to do talent pooling, would like to do comprehensive solution, future proofing, brand strengthening, cost optimization, market expansion, competition edge, and tech synergy. Because I may not be a tech savvy person, but I may have a young person who has done a course of AI of the institute or is a very tech savvy person. I think he may completely change my outlook. Like for example, today, in a few minutes, I think my team in office would come up with a lot of data on today's topic, which I would have taken maybe hours. They have taken minutes to come because of the AI solution. So it's a teamwork which is possible when you are together. Most important, I think you have to see market expansion. You as a proprietor, you have limited 10 to 12 hours of working. It's almost impossible for you to look at every sector, every area, every future potential which are there for your client. For example, you can do only taxation, but there is something called GST, international taxation, FEMA, transfer pricing, valuation, merger and acquisition, deal advisory, transaction advisory. These all areas, I think, is not what you can do individually. But if you come as a group, and now the new sector coming up is the GCC, the back office outsourcing, outsourcing of finance function, all these areas you cannot do it on your own unless you are a group of 10, 12, 15, 20 people. I think you can give, like we call, one-stop shop, right? One-stop shop service is where everything can be done in one form. So what we have, meant here, what is mentioned here is all the need of the hour. And let me tell you, friends, only and only if you take this first step that yes, I feel there is a need, I think that's very important. Brand strengthening, you simply say, when you go out in the market, today you just say Bisleri, it is understood as water. Same way, when a brand is there, definitely a brand will be a recall value where people will say, okay, you can go to so and so firm. I think they have a great brand value. Your work will be done. So all these are very important call which all of us needs to understand and then market ourselves. So basically, market expansion and ability to offer comprehensive solution, I think, is the key in our case. And finally, you need to decide whether you would like to be on your own, you would like to be called yourself as a brand yourself, or you would like to come up with a group and continue the strategy what you have thought of. Yeah. So worried about losing your independence. So basically, collaboration does not automatically mean loss of independence. Combined strength improves resource access and delivery capacity. Broader client base reduces dependency on few clients. Risk sharing improves sustainability. Strategic freedom often increases with stronger institutional setup. What does this ultimately mean? When you are looking at larger client, all the clients feel whether when I grow, are they growing also as a chartered accountant firm? Are they keeping pace with my growth? And would they be still continuing with me when I grow, or they will remain at their own pace? I grow, I need to change a CA firm who matches my growth, who understand my needs and can cater to all my services. I think that's very important. When you continue to be a sole proprietor, I think this is going to be the problem. It will be very difficult for you to match up with your client. It will be like you start a client, you work for him, but as he grows, he goes to a bigger firm. the best cake, right? The proof of the pudding lies in eating. In same way, the pudding will be eaten by the bigger firms because that's the time when they have a capacity to pay. And when you remain small, definitely the capacity to pay reduces. One. Secondly, they feel that you are not in bandwidth with what they are looking at it. And that's how the bigger cake, larger chunk of services move from your firm to larger firm. So this is what is a very, very pragmatic approach, what I think a sole proprietor needs to take. So up till now, I think we were more on looking as to whether you should do it or no. I think you all need to review your strategy, because what we are going to do in future is more about the technical part, about what the committee has thought about it, how to go about it, what are the procedural part. But I think the previous 3 or 4 slides make the entire content. Reason for you to listen further comes from the first 3 slides. And let me tell you, I have been visiting several countries on professional work for regular basis, whether it's Europe, USA, or you can say Far East. I have seen in USA especially, CPAs have more or less individual practice. They don't have large corporate clients. The individual chartered accountant either are in tax practice, audit practice is more or less not there, and they all have merged. I mean, in fact, abroad, the concept of merger has started about 10 years back. And now it's at its peak, where all large firms are trying to aggregate and try to see smaller firms merge into them. They are forming alliance. They have seen the work does not continue with them being individual people, and there is no growth. If they see the CAGR growth is hardly 5% for everybody, unlike 20-30% when they are in a big, large network where they offer everything physically, geographically, they are present everywhere. And that's where I think the whole game plan changes. The area of services, super specialization, it's more like a general practitioner in a doctor or a medicine field. What they do, we must have witnessed as compared to a super specialty hospital like an Apollo. The institute wants you to be an Apollo hospital and not a small general practitioner, because the growth, you can't encash on anything, neither your expertise, nor your clientele network, nor the income element. Nothing can be encashed on this basis when you are individual. Unless you are a part of a network, the network grows, you also grow, and the client also grows. I think that's the sound and substance of this committee. And this committee is meant to enhance all the chartered accountants who are now in practice, ensuring that they do well economically, not only be a conscious creator only, but also from the point of view financial creator, I think the institute wants to be in. So now coming to this, having you clearly understanding that why this is the need of the hour, now we go to the next slide, which is more of what are the nitty-gritties and how we should go further for the aggregation, right? So the topic is, the heading is, what if I lose my firm name? The name concerns are real, has to be addressed upfront. The firm name may be frozen under the framework. Seniority and date of establishment can be preserved. Option to demerge provides comfort in structuring. Legacy should be protected and not ignored. There were several meetings which I have attended myself, where the committee has said, assuming that I decide to merge with somebody, but after 3-5 years, I think that, okay, the concept is not matching as to what I had thought. The growth is not happening. What happens to my original firm name? That institute has ensured that your firm name, for example, in my case, Ineshar Doshi and Company LLP, continues for a fixed particular period. Secondly, the date of establishment will be the original date. What is there? It will not happen that after 5 years, in 2030, if I see that I would like to restart my practice, I won't be given 2030 as date of establishment. It will go back to the original date, which is maybe 91 or whatever is the day. So you don't lose your seniority. Your establishment is the old name and your name is preserved. I think this is the most important discussion. First thing happens on the table. What if everything is scrapped and I demerge and I want to continue my own practice? Yes, definitely possible. And the committee has taken several discussion on this to ensure that you get your name back, your seniority back, and the establishment date back. So the next is the strategic considerations for merger. Merger should be strategy-led, not emotion-led. Evaluate whether the combination creates value. Focus on complementary strengths and not just bigger size. Consider geography, service capability, and client profile. Wrong merger can multiply problems. This is what is day-to-day we have seen facing. The committee has gone into several discussions, exposure draft. They have taken suggestions from, I think they have received more than 400 or 500 suggestions, feedbacks. They have taken line by line every feedback. The committee has discussed internally, and I think this is how the guidelines have come. So the first thing is merger should be strategy-led and not emotion-led. What does this mean? You have to first be yourself convinced that there is a benefit in the synergy which is going to happen. The combination or collaboration of 10 people coming together is not going to be duplication of effort. Each one has a specialty as to why we are merging. Either they all have similar corporate clients or everyone is doing in a different area of practice, so that synchronization will make a one-stop shop firm. So firms which are doing only GST, firms which are doing, say, valuation, some are doing transfer pricing, some are doing international tax, some are doing accounting, some are doing audit, statutory audit, tax audit, internal audit, everything, back office, financial resources, payroll. If people like these firms, small firms, come together, it's more a strategy. You are there to give this as an entire package, right, to a firm. We are more a department store rather than a boutique firm. Boutique firm may have a great practice area, but department always sells better. You get more customers, more footfall, and more revenues are guaranteed. So something doesn't work, something else will always work. Evaluate combination which creates value, right? Focus on complementary strength. Complementary means cross-selling. I have a client for whom I am doing, example, international tax, but he says, I want to set up a firm. Can you suggest some company law services or payroll services? Yes, my other partner does it, and you may please refer. So that is called cross-selling. Somebody says, I would like to look at an option for merger and acquisition. Can you do due diligence service or valuation service? Yes, one of my partner does it, and I will be very happy and to recommend him. Obviously, the other partner has to be equally competent, equally diligent, and equally conscious of client servicing. So once that is done, definitely you have a better hold on the client and your multiplication of mergers happen. Wrong merger can multiply problems. Yes, that's for sure. Because if there is duplication wherein there is no synergy, I think, like we say in English, one bed, but two different dreams are not possible. Same way, one bed, same vision, same dream, I think is the only way where either it's in a married life or a financial collaboration or a merger of CA firms. Everywhere it works the same. So there are 6 pillars which okay, not visible. Okay. So there are 4 pillars which leads to vision for a purpose-driven merger. First is the trust. Second is transparency. Third is cultural compatibility. Fourth is vision alignment. Each one we can talk for hours because these are the 4 pillars of any merger. We call it the non-negotiable pillars of a purposeful driven merger. Trust is first non-negotiable. Transparency on clients, finances, expectation is critical. Cultural compatibility affects long-term success. Vision alignment is essential for future direction. Weak foundations definitely lead to failed combination. I know on a very one-to-one personal basis, 3 or 4 very, very large firms whom I had met saying, you all are so great friends. You all are known as a family. You all move around together. You all travel together. Why don't you merge your 4 or 5 firms together? Because you know them. They say, no, we have trust, but probably there may not be transparency, right? Because I may not share everything of my client with the other partner. He may say that then there is no point. I have to do cross-selling. If tomorrow my client wants some other work, I should be in a position to refer to him. And that's how I think the transparency comes. Cultural is you want to do something ethical, you want to do in the right way, you want to do everything legal. I think that's a cultural compatibility. If there is one partner or one sector of the partnership which says, let's compromise on ethics, documentation, or anything, I think that long-term vision or compatibility cannot work. And last is vision alignment. What you want to do 10 years from now, I think that's the vision alignment. What you want to be and grow in next 10 years, I think again is a vision alignment. If all of them have one vision, the way we said one bed, but one dream, I think that's the only thing. We say vision 2047, vision 2030, that doesn't matter. But have a vision, have a mission statement, and that's where I think the whole firm will always get guidance. Wherever there is a shake around, I think you again go back to your vision statement, again go back to your mission statement, and again I think you are back on track and you can move further. So now next is laying the groundwork. I think a lot of things have been said, a lot of things have been discussed, where we are, what we are, why we should merge, what is the process, what are the pillars of a purposeful merger. Now we go to the groundwork, having to start with. So first, start with a clear expression of interest. Define your intent and expected outcomes early. Conduct exploratory meetings seriously. Assess vision, practice synergy and geography. Identify key clauses, compliance checkpoints at the outset. This is the first handshake towards transformation. We say where vision meets possibility, the first handshake towards transformation. Think if you are practicing on area of taxation, international taxation, look for a firm which is doing audit services, which you are not doing. Look for a firm which is doing GST, which you are not doing. Identify firms which are doing company law, due diligence, valuation, and where you immediately would like to start outsourcing CFO services. You try to match at the first level, what is your clear expression of interest? You are not big because you lack certain synergy. Please look and identify at those outcomes and forms. If you feel you are lacking in a particular deficit area, look at those types of firms where you can identify. And that's how the first groundwork has to come. First, understanding that yes, I will grow when I am an institution. The continuity happens. Second, and third, client is happy that if I grow big, the same firm will continue to give me services because they are also growing, they are also becoming bigger. They also have a bigger dream, vision, the way the corporate client is having. So, assess vision, practice synergy, and geography. What does this mean? The reason here it means you need to see that you want to be a Mumbai centric, Delhi centric, or Delhi NCR centric, or East centric, West centric, or India basis. If you wish to be an all India, then there is different models which institute has come out with. If you want to be a regional alliance or a network, that's a different thing which you can do. Various models are mentioned by the committee, options given by the committee. It is upon you to think on how you wish to go about it. Most important, conduct exploratory meetings very seriously to know really I would like to go in an area which is what. For example, I have seen many firms where 5 partners, all 5 of them are into similar area of practice, but they are in different cities. So that's okay. For example, we do international tax transfer pricing and FEMA. Maybe assuming we are Mumbai centric, but there are 4 or 5 firms, somebody in Delhi, somebody in East sector, somebody in South, somebody in Central India. If we 5 merge together or form an alliance, I think it's a great strategy because then I'm reaching out to a larger audience and we all can do a cross-selling to each other whenever the opportunity arises. But if all 5 firms are in Mumbai doing the same service, right, only our size becomes bigger, but that synergy is not that great. It's a very great area, great opportunity to be together with a larger practice, but geographical complementaries are equally important because then you have a broader vision and your physical location also makes a lot of difference. If you say you are only from based in Bombay with no other branches, there are some kind of lacunas which you may have, deficiency you may have, as compared to people say we are 6 branches, 8 branches, 10 branches. The quantum of work, opportunity, and options increases. This slide more focuses on the due diligence, check the audit compatibility and conflict issues, review restrictions under Companies Act, under Section 144 of Companies Act, examine disciplinary or NFRA related concerns, assess revenue, quality, receivables and dependency risk, review team strength, systems compliance culture. So this is after the groundwork you have done. You just see whether do you have any issues, whether the firm has any issues with the disciplinary committee because institute runs the DC committee. NFRA reviews for listed companies as of now, there are concerns and you need to see whether we should get aligned with those firms. Section 144 is very clear. As of now, it's not a big issue, but yes, definitely you need to be clear that there is no conflict of interest under 144 because companies where you are statutory auditor, you cannot do the management consultancy services, or if you can do that, then you cannot, you have to resign as an auditor. Those compliances are very critical. So now, next section is to seal the deal in the sense now we have decided You have understood that there is a need for me to collaborate. There is a need for me to merge. There is a need for me to be part of a larger network first. Then you have done an exploratory deal of looking at who can be my potential partner, or who all we can come together and be together and become a larger firm. Once that is done, you have identified, you have also known that you can preserve your name with the institute for a certain period. And as far as I know, they decided to keep it for 5 years, but I think the chairman and vice chairman will clarify whether they have reduced or increased that period, because they decided for 5 years. You are given a chance to decide whether you want to come back, and then your date of establishment still remains the same. So it's not that once you decide to merge, it's like a one-way traffic or one-way road. You can always come back and start again on your own. Look for new alliance, new partner, and new collaboration. So to seal the deal means decide the name of the merged firm, finalize the registered office, select the managing partner for authentication, clarify co-authorization if needed, avoid ambiguity in authority and representation. So once you have decided together, decide on the firm name, what you intend to practice in, where the registered office would be. For example, if 4 firms in different cities are going to merge, then which is the nodal office or the registered office of the merged firm? And if there are in same city, 4 firms are merging, which would be the main office? You need to decide who is the managing partner to authenticate the process at the SSP portal, and who will be responsible for everything, because institute looks more at the nodal officer or managing partner. He is responsible to ensure that all the compliances, all the procedures, and all the reportings of the institute are done by him, and he would be responsible. Obviously, there will be a co-authorization of partners in this situation that can also be done. So what are the key negotiation points as and when you go through the through the whole process we call drawing the lines? First is the terms of merger, assuming 4, 5, 6 firms are coming together, 4, 5, 6 sole proprietor, partnership, or a combination of sole proprietor, partnership, LLP, any form is possible, any combination is possible. So we call it as terms of merger first. Second, the transfer of assets and liabilities. Basically, the asset and liabilities include some kind of intangible. It could be some partnership firm or partners may be owning properties, proprietor owning properties, laptops, computers, furniture, etc. Liabilities could be in the form of office loan they may have taken, or any employee liability, gratuity, etc. So that is second point. Third is what will be the management structure, in the sense we are 6 people coming together, 10 people coming together. Who will be the leader? Who will be clear? Who will be setting the goal for the firm? Who will be responsible for the growth? Who will be responsible for the vision? Who will be take call of the targets, objective, and whether the purpose of merger is taking place. So management structure, allocation of work and profit. We need not discuss about that. It's very amply clear. Remuneration. I have seen in most cases 3 questions being asked by everybody who wants to merge. I am getting, say, X amount of money. I will get same, I will get less, or I will get more. And if yes, then if I'm getting less or same, what is my purpose of merger? But people don't realize today for next 5 years, 10 years, you may earn the same. But when you are in a group, first 3, 4 years, maybe you are same. But then the whole group effort comes in, the revenues are distributed much larger and for an infinite period. Even though your performance is less, but there are somebody else who is taking over, and you are also, sort of insulated, that because of your age, there is some junior partner who has taken over, but carries the mantle of the firm, and ultimately the focus is seen and you will see the long-term results. So remuneration, this is where maximum discussion happens. I have seen practically. We have seen people spending only 5 to 10 meetings only to say that, okay, this should be my remuneration for next 5 years. If this is agreed and signed, then only I'm ready. Then only I will be very happy to be part of it. Otherwise, if I'm getting same or less, I'm very happy the way I am. Administrative cost, because everybody is used to a certain kind of expenses, certain kind of, you can say, salary level. So that's where I think very important. Some CA firms say, okay, we pay 8 to 10 lakhs for a fresh CA. Somebody says we don't pay less more than 5 or 6 or 7. So those kind of administrative issues, where the office should be located in prime city area, prime building, or even you can have an office in prime building, but a back office in a little remote area or remote town. All these kind of administrative costs are discussed. Client and employee transition, every client is very comfortable with the current setup what you have. They say, Arey, you only have to prepare the trial balance and the final balance sheet. Somebody says, no, we tell our client to prepare the entire balance sheet, we only review. And that's where the difference comes from the culture. When there is a merger, the one partner would say, no, we would never go into the nitty-gritty of preparing the balance sheet. The other partner will say, no, I don't, I do everything, right from review of accounting entries to trial balance to preparation of grouping, schedule, notes, accounts, report, everything is what we do it. So it all depends on the culture. It will take 2 3 years for everything to set up. But yes, same case with the employee. There are some firms have employees which have more or less have to see that work is more done by the client, accountant, rather than them. In some cases, the firm does it and the employee does it. So all these are very, very important. Some clients can even go away saying that no, previously your firm was doing it, but now since you are not doing it, I will locate some other CA firm which renders this handholding services to me, because our accountants are not capable. They are not educated to come up to this level. Sorry, we cannot do it. So if you are very stringent in those situations, even you may lose the client. So that's a very important call which you need to take it. Eighth is the confidentiality of your negotiation. For example, I may open up my list of client, my services, fees amongst all the 8 or 10 firms which want to merge. But if tomorrow these data are misused, the connections are misused, I mean, it is going to be a big issue, and you may see that there'll be fights. And then most of the time we have seen NDAs are signed among everybody, and everything is shared based after the NDA is signed so that nobody discloses anybody. Non-compete agreements are signed. And tomorrow, if this doesn't work out, nobody will approach anybody's client, because each one has right to see the other partner's revenue, client, fees, structure, man-hour cost, employee cost, administrative cost, everything. So from that process, we have seen that confidentiality has to be maintained. Secondly, if there is a merger, the dispute resolution mechanism is extremely and very, very critical, because like I've seen in many large firms, there is every month a partners meeting. All issues raised during the month are discussed in the partners meeting. There is somebody which has a veto power, is the like the nodal officer or chairman, or they call him the managing partner or senior most managing partner. He has the final say. If there are disputes between two partners on anything, obviously there is a dispute. Somebody says this area of activity, I think we should not indulge into. But then if the firm indulge into, then what should be the mechanism? So all this, there could be hundreds of issues on which there can be a dispute, and hundreds of unknown strategies which can be there to resolve them. So I think even in income tax, we have seen dispute resolution is the most important area what the Ministry of Finance or CBDT is looking into. And same thing would happen with the merger of firms. And then lastly, assuming it comes to a point where it is non-negotiable and one partner or all partners or a section of partners want to demerge, then what happens? Ultimately, the terms of demerger or valuation, how he will get his capital back, or what will happen to the clients, what will happen to revenue, what will happen to employees. Everything is discussed, and then it should be a smooth transition of demerger also. So these are the 10 points, which is more like a complete 360-degree understanding for when you go for a negotiation for a merger. So having understood, having negotiated, having discussed all the 10 points which you start with a merger, right? The paper trail and the regulatory compliances, documents and approval. How does it start with? You first file a merger agreement within 30 days, file a reconstitution / partnership deed with ROC if it is a LLP, or ROF if it's a partnership firm. Decide and freeze the name of the merging firm. So, so most important is we have observed that the process of 30 days is where I think we have got feedback from several firms that this is too less time, and 30 days we cannot resolve all our differences. But yes, I mean, there has to be always some timeline, and that's how this timeline currently is the 30 days. And the reconstitution, as you know, I mean, the ROC process and all is the standard timing within which you need to file with the Ministry of Corporate Affairs. So, post-merger integration, adapting to a new normal post-merger, basically. So the idea is like this: realign your SOPs, documentation, client service processes, integrate technology, migrate data securely, redefine roles and reporting lines, strengthen controls, audit trail, documentation, standardize billing, budgeting, client communication. You must have seen in most of the CA firms, many of the things are done complementary, thinking the client is a family, client is with me for several years. I think these things we cannot build. These kind of services are free. These are part of my annual package or annual retainer fee, which I'm charging. And some things are just casually asked question, which I need not file. So how do you do with the new normal post-merger? Is compliance and control includes redesign, internal check, maintain audit trails and documentation. And most important, I've seen every firm, when we get a peer review done, we learn from the peer review auditor why, I mean, they come with host of ideas as to how we can improve on documentation, what other firms are doing and we should be doing, what would help us in improving our SOPs, how we can help in the client service processes. For example, through the entire process of taking a consent from the client, getting the board meeting approval for your appointment, then basic client KYC to be done, NOC from previous auditor in case you are a new auditor, or whenever it comes to any kind of management letter, what is the basis on which they are giving management letter. So every firm have their internal criteria. I know firm which says, I don't verify stock, cash and current assets because I rely on management declaration. And many firms say, no, I don't rely on management. I do the verification of all current assets, fixed assets ourselves at the end of the year. Yes, we may do it on test check basis because of the vastness and too much of a quantity, but I don't rely completely on management approval. But that's again each firm's criteria. But when you are unified, when you are merged, when you are together, you can't say one partner does on test check basis, one partner completely relies on management declaration, and one partner does 100% verification. I think all three extremes are not possible. The firm has to have a unified approach and then do the audit on a similar line, seamlessly in a synchronized manner. Then integrate technology and migrate data securely, because like in our firm, we use 30 to 40 softwares which help us in doing either audit or client management or etc. etc. But like in transfer pricing, we have 5 to 6 different databases. So we have to ensure to see that if we are together, all of them are using the same software, similar kind of processes and same technology, including hardware, software, everything is very important. We ensure that we use more of a licensed, not more, 100% licensed software. There are still firms which look at not buying 100% licensed software. They have ways and means to violate the IP rules and the software regulation. So all those issues needs to be discussed and sorted post-merger, and you need to ensure. Secondly, man-hour billing, client management, realign engagement teams and communication channel, unify billing and credit control practices. What does this mean? Ultimately, globally, when we travel abroad, we have seen a unified billing of, there are 4 levels. When you go to a foreign firm, I want your quote. They say, I cannot give you a fixed quote, which in India, I have seen bravely chartered accountant firm giving a lump sum fee quote. Even though the value becomes more, man hour is higher, they take that risk. Maybe they know their job very well, but still all over the world, no law firm or chartered accountant firm or CPA firm gives a lump sum quote. They only give an indicative quote 1 and most important man hour basis for 4 level. Senior partner, partner, then junior partner, then a support team, right? So these 4 levels starts from 300 to 500 for senior partner, 250 to 350 for a junior partner, and then for most support staff, $100 to $150. Nobody charges below this. Whereas this part kind of thing, I have not seen much in India. But when you are together, at least say that, okay, this is the ballpark number I would be charging for my junior assistant, for my employee chartered accountant, for my junior partner, and for my managing partner. So at least some basic criteria, so that it should not happen that one audit, one partner does at a very low cost because he's putting man-hour cost too low, and another partner does it at a very high cost because he's charging much higher fee. That may not be serving the purpose post-merger. It's very important. Unify billing and credit control is very important. There are firms which say that, okay, they collect their fees only when the next year audit starts. And there are firms which says, okay, once audit is done within 30 days, you need to make the payment. And that's where again, you need to have a unified or a similar policy for everything. I think more or less the trigger points which are important, and it's a very common sense we as a chartered accountant can understand that compliance control, financial management, client management, process realignment, technology integration, human resource dynamics. There can be possible, like I have seen suddenly Oracle laying off 30,000 people, out of which 12,000 are from India just last week. The thing is, because of AI, suddenly humans have become absolutely redundant. If you see two large advertising firms, Omnicom and IHG, merging in USA 3 months back, almost 10,000 jobs are gone because why? There is a duplication, right? So human resource dynamics are very important. Whom to continue, whom not to continue. If five firms merge, there can be five HR managers. Do I need five? I may remove. I may keep only two. Remove other three. I may have accountants, which may become redundant. So same way, I think human resource dynamics are very important, very critical, and most important, the decision making of whom to keep, whom not to keep is a very critical thing. For example, in case of Oracle, morning 6 a.m., the email went to 12,000 employees in India, and most of them age was above 50 years. Imagine getting an email morning at 6 a.m. saying today is your last day, you will get 90 days salary, all your things can be taken up, your retirement is done. So imagine at age of 50 plus, right, getting email like this. They have huge responsibility of family, they have some EMI and loan going on. So those dynamics are very important. We in India never do like this. Ultimately, the firm has to take care that everybody is settled, everybody is continued, and some kind of responsibility is aligned to everybody. Yeah, so networking, this is the key for everything. Networking is a growth route, short of a full merger. It provides access to peers, broader expertise. It helps firms stay relevant in the changing profession. It improves visibility and capability. It can be a stepping stone to a deeper integration. This word, as you all are aware, networking is a very, very common word. I mean, nothing which I can much explain in detail. It's quite common, quite understood. So benefits of networking, yes, IP and knowledge sharing, common quality and control procedures, shared business practices and work methods, common IT infrastructure and systems, stronger branding and marketing efforts. I think it is absolutely clear that when you are in a group, right, you do a common effort into, like, no need to buy. All five firms don't spend money on all the infrastructure, hardware, software, on IP and knowledge sharing in the sense of databases, in the sense of tech search, in the sense of like formats, like if I have to file section 154 rectification application income tax, I should have a standard template available which every partner, each constituent of the firm will share, and ultimately it is in the benefit and in the interest of everyone that we just share. In fact, there is many firms I have seen, they put in their clients complete detail. So if suppose I want to reach out, even for, I know, okay, I know this particular tax officer very well, or I know in ROC this particular officer very well. it's like a common pool. And if I have some issue, I will reach out to that partner that this particular application needs more clarity. If you can go and visit, I think this issue can get a very speedy approval, or any other issues are there related to gap in the application, we can easily clarify or we can easily get it rectified. So those are also common benefits of being in the common networking. Next is the branding. If I say ABC forms together, or if I give a particular name, I institute allows you, because you are a registered network, to brand yourself, and that's the whole idea, where you want to be shown as a very large group for a common purpose. So institute also would be very happy when you do a branding and marketing. But yes, within the rules, within the regulation, it's allowed common quality and control, because you are going to share best practices amongst yourself. Once you may not have thought about it, but the other firm would have already had it. You just simply borrow, and as a group, you all can practice and you all can do it together. Or you have something, for example, stock verification. The client has 18 of factories or godowns or depot within the network. In few minutes, I know his quality, his purpose would be the same, and ultimately you get the best effort with a very low cost, with the best of effort, and lastly, correctness is very important. Right? So client is also extremely happy. So these are the benefits of networking. And these are the brief history. I think when the chairman and vice chairman comes when there is a Q&A session, I think any specific query related to any particular thing, they would be addressing, and they would give more clarity on a lot of things which you may have while after we end the session. But a broad, you can say, history. In 2005, it was the guidelines were issued for the first time, again revised by the council in 2011, again revised in 2021. Ultimately, this is being refined on a continuous basis, as and when you give your suggestion, as and when things come up to the institute, they are very, very proactive. Immediately action is taken, discussed, debated, and corrective action is taken. Because they want to ultimately see that this happens and it sees light of the day, and finally it is in the better of the entire profession. Because as Modi ji said, the way software industry, India has become capital to software, pharma, same thing for accounting sector. ICAI is the nodal body which will take up the force of the accounting sector, or will be India, or the capital of the world can be India, with the blessings of ICAI and all the committee which is looking into it. So what are the current issues facing the Indian CA firms? I think most of the thing is what we have seen from the personal interaction, what the committee members have done, met, they have visited several cities, towns, small location, to know what would be their wish list, why you may not merge, why still running a proprietor firm is more a prestige even today, you are not looking at merger. So I mean, the fact is, from the data which I said, 74% is sole proprietor. It comes that majority CA firms are SNPs, small and medium practitioners. As I said, only 2% out of almost 1 lakh firms are only in the organized practice of LLP partnership with 6+. Rest 98%, you can say, practically are less than 5 partners, even those are 5 partners if you say, but when you see there will be duplication of firm where partnership firm they run together for certain sector of audit, say stock audit, bank audit, CAG audit, but then they have their individual practice on a sole proprietary basis also, which is not what we are looking. Large firms have confined themselves to audit and taxation only, and the newer areas which are coming up, like the systems audit, transfer pricing, international tax, due diligence, valuation, forensic audit, or something like outsourcing CFO services, treasury management. These areas, I think, most CA firms are not much aligned into. Why? Because they are individual, and they have never thought of collaborating with newer generation or a newer area of practice. So that's how they are more into audit and taxation. Cultural integration, conflicting interest, priorities, attachment with the firm. This is the one of the biggest, you can say out of 10 firms which institute must have met, smaller. They say we have more affection, or you can say attachment to the name which we have started. Once we are in a network, we lose our identity. Tomorrow nobody will recognize us. It's like a family image or a brand image. In my society, I would be, looked. Today I am called as known as my firm, but when I grow out in the society, and I have my name is not part of the firm name. It means that I have no much respect, is what people think. I think this loss of identity is one of the biggest concern. People don't go for merger. Then retention of client and staff, most important, comes when you are not growing as per the speed of client. You are not growing as per the need of the customer. You are not growing as per the wishes or the speed at which client wants you to perform. I mean, that's where you lose the client. So these are the basic issues, but out of this entire issues, two are very, very critical. One is attachment of which firm name, right, which they feel there is loss of identity. Second, most important, cultural integration and conflicting interest and priorities. I think these two are major issues I've seen where most of the CA firms have issues and they don't want to go further for merger. What are the models of networking? The chairman, vice chairman mentioned about 6 forms. I will be running through it, what all the approaches are there. But when there are basic nitty-gritty further, I would be very happy if the chairman, vice chairman, and the committee secretariat can give some more clarity on it, because they are more hands-on on the procedural part. The models of first is the alliance model. Second is the network of firms. Third is the lead firm. Each model offers a different level of integration, and choice depends on your objective, trust, and growth vision. Each of them are completely different. Each one of them have their pluses and minuses. Each one of them have opportunities and threat. Each one of them have options to go from one option to the other option. And that's how the entire guidelines are framed. So coming more deeper into the models of networking, one option is like on the option A. In that model, different firms coming together to form an alliance with a new name of alliance and continuing to practice independently and can showcase as an alliance to the world. In B, different firms coming together to form a network with a new network firm name and practicing in the name of firm belonging to the network. This model is divided into further two options, which is B1 and B2, where network of firms in existing model by practicing in individual firm name, and network of firms with a lead firm acting on behalf of constituent firms of network. Depending on how you wish to, depending on the faith or your purpose, I think net A or B models are possible, and you can think about it as and when you are more deeper into the scheme of things. So now we come more into the alliance model of networking. When four firms comes together to form an alliance, they add the word "and alliance" to their common name. Registration will allot a unique registration number, alliance registration number. Then in the empanelment, all firms in alliance can apply for empanelment separately as individual firm because they are an alliance actually, they are not merged. If one or more firms quit the network, it will not deprive the remaining firms from doing the work they've already secured by the virtue of network. This is the one of the option in the alliance which we have seen. This is part A. Then B. Part B, this is the second model of networking when firms come together to form a network, they are and affiliates and network to their common name. Again, a unique, they call network registration number. Their alliance registration number is given, your network given. And again, all firms belonging apply separately as individual. Again, same thing. You can always, one or more partners comes out, it will not deprive the remaining firms from doing the work. So in broader base, if you see, it is more important to see you are want to be part of alliance or you would be part of the network. And all of them are depending on how close-knit you want to be on a long-term basis. So the slide speaks of everything, what is possible, but every day there is going to be an improvement. If you feel that something is like blocking the growth or blocking the merger, you can always approach the institute, the committee, and the ever dynamic leader, chairman, vice chairman, committee, and the secretariat. They do a fantastic job in putting up all the issues before the committee for resolution. So now we come to the
Next.
okay. Sorry for the interruption. I was just trying to see how much time I have got. It's already 6:30. So I think the nitty-gritty part, this presentation can be shared by the committee to everyone, because I would like to spend a lot of time on Q&A, especially on the need to collaborate and the nitty-gritty part on the model, alliance, network, procedural part. I think the chairman, vice chairman, or the secretariat committee can give reply because they are more competent for doing that. But in next about 10 minutes, I would like to close my presentation because idea is not to discuss all the 39 slide. Idea was to give you a brief overview, a glimpse, and the essential concept of the aggregation of firm. That was the main objective. The nitty-gritty was never the objective, but still, I think the presentation covers everything, and this will be shared by the institute, and I'm sure it would be on the website of the institute also. So I would like to take another 10 minutes to close my presentation, and then the Q&A can be taken up by the committee as and when it gets over. Yeah.
Sir, thank you for the presentation.
Yeah.
And sir, I have some questions from the members. Can I
Yeah,
ask
but
them?
yeah, Payal, what we do is, I would like to see that the questions are given and addressed when the chairman and vice chairman is there, because they would be the right people to give correct answer, except for the merger, why merger and the process of merger. But if they wish to discuss on the nitty-gritty part, I feel the committee team should be there, and they would be the right people to give the answer, and it will be better. So would you
Sir,
like
some of
to
the questions are on
why, right? Okay. So what we do is
so can I ask you the
yeah. So
sir, can I ask the
yeah, sure, sure.
Hinesh bhai,
Yes, sir.
are you end with your presentation?
Yeah,
You are
actually, yes, because Agarwal ji, it's now 6:30. I will,
Yeah.
I finished the presentation. The
Okay.
other part is more on Q&A, which I think all members are waiting to hear
Well,
from you, sir.
no. Actually, you said na, I will within 10 minutes I will finish.
No, I think
moderator.
I can end here, because I want
Okay.
members to be more interactive rather than only knowing the process, sir.
Sure,
Huh?
sure. So,
Yeah.
moderator, please take the question answer. Inish bhai, you remain over here.
I am
Stop
here
sharing
only,
your
sir.
presentation.
Yes, sir.
We'll handle this.
Yes, sir.
Now,
Yes, sir. I am here only, sir.
anywhere you want to give your input, please give it.
Sure, sir. Sure, sir.
okay,
Over
so
to
sir, thank you, sir. Sir, I have a question from our members that, sir, all the firms are doing partnership only for some common big assignments, and their individual practices are also running so simultaneously, just to avoid high tax impact. So what is the view on this point of yours?
I would
Actually,
request
let me tell
Sanjay
you.
sir to
Yeah.
please take up this, sir, all the questions. I will add if required wherever needed, sir.
Yeah. Can you stop sharing, sir?
Yes, sir. I'm
Inish
doing
bhai?
that only, sir. Yes, sir. Yes, sir.
Okay, thank you very much. Thank you, Payal. You see, the concept, as Inish bhai has also said,
Thank you, sir.
yeah, that if people are joining and they are, I said in the beginning itself, if you do not have a capacity to bear out something, you cannot grow. So if people are joining partnership only for common big assignment, they will not be able to get big assignment unless until they do not have their separate interest. Because you see, anybody who's going to give you the work will also look into that, what is the name of your office, whether you are working under a similar banner or single banner, when you present your card, whether that visiting card is containing two forms names or something. And then the problem is this, the high taxation, you will get a pinch only for some time. But if you want to really grow, then you will not find that this high taxation is a barrier to you, because ultimately you are contributing to the national exchequer. You are contributing to exchequers. So when the input will increase, the high taxation will be a small thing for you. For example, if you are only in the range of 10-20 lakh rupees, then you will be thinking of the high taxation. But when you transfer yourself to 50 lakh rupees or 1 crore, so your 10 lakh will be immaterial at that time. So the you can say the mindset that people are joining only for this is not the correct thing. If you have a larger vision, then you come for aggregation. For smaller vision, do not come for any aggregation. Thank you very much. Next question, please.
Sir,
Hi.
we've got the another question. Yes, sir. Which says, can CS sole proprietor be actually able to survive without support of aggregation?
You see, always there is a two side of a coin. And what side of the coin is looking brighter to you is important. The sole proprietor, they will have their own question, they will have their own space. Those who are running for economy of scale, they might not go to a bigger firm. Those who are smaller people, they'll not be able to go for a bigger firm. Also, if a sole proprietor is enjoying a specialization, litigation specialization, forensic specialization, some product specialization, stop loss, reducing loss, these are the specialization if a sole proprietor acquires, then I do not think that sole proprietor will have any problem. But the thing is this, if a customer comes, like when you have a small shop, you go and buy in the morning a bread or a butter, but when you go to a mall, you will buy not only the bread butter, but you may buy some chocolates also. You may apply your mind for something else. So this is what is important, that you want to restrict your customers, or your customer do not want to progress, so they will not come to a sole proprietor in a longer run. So this is something is my intake on this question.
Okay, sir. The next question I have, what are the strategies for partnering in a firm aggregation under ICI guidelines?
Look, as Hinesh Bhai had made the presentation, and in which when he was talking about the merger, where he talked about market expansion, competitive edge, technical goals. The strategies is like this, that I'll give you a very crude example. When you go for choice of your spouse, so you need to choose certain things, whether you want a housewife, you want a working wife, you want a professional wife, or you want a husband who is a technocrat, or you want a person who is a businessman, or you want a person or a wife who's excellent in parenting. So this is the same strategy with the partner. Partner you want for only your benefit, and you will not give any benefit to your partner, you will not get any particular type of that partnership is not successful. So success partnerships are only when you have alignment of vision. For example, if I'm on north side of India and I do a partnership with a different region, may not be having the same taste, so I have to adopt myself and I have to see. Then second, the partnering with a different subject matter. For example, if I'm good in taxation and I'm looking for a partner who's also good in taxation, so we'll have a conflict of interest somewhere. But if I'm looking for a GST expert, I'm looking for a FEMA expert, or I'm looking for something else, then we'll progress together. So one or one should not become two. One and one should become 11. That should be something in your mind when you choose your partner. Always never choose a partner for your benefit. That will not survive for a long. That is the key point of success. Next, anything you want more? While you can also ask in between if you want to have fill up in my answer. You want fill up in my answer, I can reply with a practical example of the life. Next.
You are on mute, Payal. You are on mute.
So the way you are explaining is wonderful. It actually approaches you the way it wanted to be. So the next question is, sir, how do you decide the billing structure, and which is very, very useful, and the pricing tariff in the aggregated form? How do you decide the formula and for revenue and profit distribution in a realistic, workable manner? Then, sir, it is a series of questions. There is two question more in the same segment. How do you inculcate accountability for assignment undertaken on the strength of other partner, but delivery of the service has suffered due to casual approach of the other partner?
Sir, you are on mute.
Sir,
Sanjay
may
sir,
I
you are on
repeat the
mute.
question?
Yeah, Sanjay sir,
Ha.
you are mute, I think.
Sanjay sir, we cannot hear you up. Tech team, are you there in the meeting? We cannot hear, sir.
Yeah, audible now?
Yes, sir, perfect.
Sorry. How do you decide the billing structure? I was giving you an example. I was interacting with a firm having their multiple offices and they have a multiple subject interest. So what they decided, I give you an example. It depends upon situation to situation, client to client, geographical. Also, it depends upon your subject matter. So what they do, anyone who brings a work, he will be getting a 25% straight away, whether he is executing the work or not. He will get gross 25%. Now, the firm had decided that those who will execute, they will have a capping of 30% of expenses. So 30% has gone for expenses, 20% gone for the person who has brought the work, 50% has gone, 15% they keep for technology, 10% they keep for taxation, and similarly they say the 15% profit will be distributed among the party who are executing the work, and those who are not executing the work, those who are not bringing the work, those who are not doing anything, they will get 5 to 7% of that profit. So this is something how you decide the billing structure. You raise your bill in such a manner and you raise your pricing in such a manner that it is distributed like this. For example, if I am an executing partner or I am a work partner, I am bringing the work and executing two. So my share will also get reduced because I am both doing the both. So this type of the complex structure, you can decide among yourself. You can have a MOU among yourself, and then finally you can distribute according to this. So this is the first part of your question about the billing as well as pricing. This is the example I am giving you. Then this, I think I have covered the second question now. Accountability. Yeah, accountability is also very important. In disciplinary mechanism, what we know as there are three structures. One is a partner who's an assignment partner, the person who's working partner, and the last one who's signing the partner. So normally the disciplinary mechanism takes care of the person who has signed. They will reach to the person who has signed. The rest of the people, they are behind the curtain. But when you decide the division of the work, you can decide among yourself who's going for the taking the responsibility. That is all documentation you have to do. If you are not having a documentation, you will face this problem. So this is my answer in respect of your accountability in the assignment. And for example, if the delivery if your client is expecting an X delivery and you have given X minus 1 or X minus 2 delivery. So it might be possible that you will not get a revenue. So nobody will get a share. Only the cost will be burden on the firm. So the firm will bear that loss, and the partner, those who have not worked, they will also be penalized. But it is so many times it is difficult that the satisfaction level of the client and the partner will say, I've done best of my work. The client says, I didn't get. So this is something in your management. You need to have some person who will decide about that, who will take the hit of how much. So the partner, those who are doing the work, whether they will take a hit of, let us say, 5 to 10%. Those who have not done the work, they may take a hit of 2%. So it depends upon the situation. So you need to have a, you can say, deciding managing partner who will decide about all these issues, which is known as arbitration among the partners or the associates. So these are the practical difficulties when you will work, you will face. So you need to decide about the board of management. So you will find the solution for this. Okay?
Yes, sir. Sir, there's one more question, and a very common question from all the young CAs and the young firms. All small firms are struggling after reduction in bank audit and GST audit work. And now tax audit is also going to reduce phase. Kindly give some good ways to survive in this matter.
You see, yeah, it's a very good question, though not directly related to this particular seminar. But let me tell you, you need to see the future. For example, I used to wear an HMT watch. I used to have a small Nokia phone of the button, but I am not surviving with it. Now I wear a smartwatch. So it is a consumer market. When you know it, that your opportunities are going in a particular field, what you need to do: one, acquire new skills. Two, forget about the old skills. Invest some of your time in acquiring the skill. Attend seminars. Learn what are the new areas. Come to my another committee, economic law, where I'm telling you about how to have a succession. Succession is an opportunity. Then IPR law, I'm telling you. Inish Bhai has already told you that transfer pricing, FEMA, these are the huge opportunities which are there. So you need to learn certain new skills. You need to learn certain new areas. You need to explore something. If you remain as a, I'll say in Hindi, if you will become a medak of you can say, of a kuwa, then you will not go anywhere. You need to come out. You need to improve yourself. You need to always keep on. Even at this age of 64 years, I keep on learning every day new technology. Today, I need to learn what is the impact of the AI on my practice. I'm a pure litigation. So tomorrow, all my partners, what they are doing? They are preparing the case laws, everything on the basis of AI. Even today, when I was sitting in the council, I found a reply where my one of associate has used the technology. I appreciated, but at the same time, I told him, your language is not the language of my office. When any reply goes from my office, we have a pattern, we have a style. So anybody reading it will know it that it is coming from Sanjay Agarwal. So this is what is you need to learn and unlearn also. Yeah, I think I'm up to the expectation of this question.
Sir,
Anything else?
yes, sir. Wonderful, sir. It's such, yes, sir. Sir, I have two more questions, in fact.
Okay.
Sir, the another question from the members are, what should be the process for joining a CA firm by a new partner holding certificate of practice?
What should be the process? You see, there are 2-3 ways how you join a firm. Either you become an associate without owning up any share, not as an employee. You may join as an associate where you share some assignments. You may join first as an employee, and over a period of time, you gain the confidence so that your partner or your senior take you as a partner. For example, in my firm, all articles, when they qualify, they get an offer that you see, when you join my firm as an article, I give you an undertaking at that time that I will take you as a partner within 3 years if you want to come in practice. So you need to choose, once again, I'll say, your fancy in a manner that you survive for a long. You should not be looking for small gains. For example, somebody may come to me, sir, I am getting 20,000 rupees extra in some other company and I'm going. So such type of the people are not good for the organization. So with this, if you want to join a firm, then you need to look into this, that the exact matchmaking is there. My chairman has come. Sir, so we are giving the question, answer to the question. Yes. Yeah, Payal, anything else?
I'll unmute karo bacha.
Yeah. So the next question, and the next question is there any scope of outsourcing accounting tasks from Australia?
You see, again, you are talking about some opportunity. Yes, Australia is known for giving the outsourcing, but the process of joining a CA scope for outsourcing accounting tasks. Yes, you are interested in giving or taking the Australia work, so you need to have a connect with some CPA over there. We have a specific course in our institute where we tell you how to acquire the various skills for the outsourcing. Like you need to know Joho, you need to know some accounting software, and once you acquire those skills, then you'll know how to approach those people. We have connect of so many people in that particular course where you can ask for the work. You need to co-work. There are some sites which are available where the work will be available, but all those foreign work, you need to have a quality. So first of all, acquire the respective skill for that particular work. This is my intake.
Sir, I would like to add some. Yes. Whoever is asking this question, my dear brother or sister, let me explain you that to get any work, the most important thing is network or connection. That networking or connection, along with your expertise in that particular work. But you are talking about accounting. I am aware that all chartered accountants are expert of accounting. So if you want to take the work from Australia, it is always possible. I just tell you the one real story of one chartered accountant. He wanted to work for that networking from Australia. He went to Melbourne city for 7 days, visited to shop. And after visiting 70-80 shops, he got the work from one shop only. It is 4-5 years back. Now he has 70 clients to his kitty of accounting in Australia. So you will have to work hard. You will have to make connections. The way you can get work in India, the way you can get work in your city, the same rule applies to getting work from Australia also. So your hard work, your expertise, your knowledge, I can say that focus working for that work, you can get the work from Australia also. And one connection can do wonders. Next.
Yeah, and you need to also learn QuickBooks. So these days, 2-3 software which are very common, Joho, QuickBooks, that you need to learn. Next, please.
Yes, sir. I remember sir also said that the network is the net worth nowadays.
Yes,
So
yes.
the more the network is, the good the net worth is. Sir, the next question. Can CA become partner in 2-3 different firms?
So far
this
as
is the question
there
asked.
is, yeah, so far as from the issued side, there is no problem, but you will not get a credit for the purpose of audit, CAG, RBI. You will face a lot of problem, but you can become partner in more than one firm also. There is no end. Only the limitation of some Companies Act of the total number of association cannot exceed a certain number. So that is there. That's all. Nothing else.
Again, some value addition file that a question comes in Income Tax Act. Can I give gift to my minor son or son's wife? Question is yes. You can give. You are also income tax expert file, but the consequences
Yes,
are there.
sir, section 56 to
Their
10.
clubbing provisions are there, right? Likewise, you can become partner in as much as many firms you want, but the consequences are there. Whenever you go for empanelment with the C&AG or the MEF of RBI, then you will not get the marks. The firm will not get the marks of your partnership because you are not exclusive partner in that firm. The exclusiveness will be a problem there. So otherwise, anybody can become partner in many firms, no issue. Thank you. Next.
So the last question for the day, it is, should form AD3 be filed for the existing company where the firm is the auditor before the merger?
You see, AD3, if suppose this is a question which is answered in the one of the LLP guideline also, if you are having the same FRN number, there is no issue. But if suppose your FRN is now freezing, I'll say you are merging with this firm and your FRN is going, you need to file a fresh AD3. You need to take the appointment in the new firm because that is a different FRN. There are certain small difficulties in this. So far as small assignment is concerned, private limited, etc., there will be no problem. But in the case of listed company, you will have a problem. So whenever you are merging, all these issues have to be penned down, and you need to think about it that what will happen after the merger. So this is important. This is a question in the case of only merger of firms.
Okay.
Thank you, sir. This was the last question I had. Still, I'll see if anything new, sir. So finally, I'll ask sir, Chairman sir, Satish sir, and Vice Chairman sir, Sanjay sir, to give the vote of thanks, and we'll end up the session.
It is the right of
And
honorable
yes,
Vice
sir.
Chairman sir only to give
No,
the
no,
vote
no.
of
Hinesh
thanks.
sir is also there, and Hinesh sir, it was really wonderful session. And for youngsters like us who need to know about how the growth can be made, it was really very helpful.
So I will request Sanjay sir for the formal vote of thanks because I already have said in the beginning that he is Jagat Guru. Jagat Guru's blessings is always necessary. Over to Sanjay sir.
So let me tell you, for any vote of thanks, what is the most important, that the question answer of the participant are fully met. So normally we start giving the thanks for the speakers, all organizer. No, but without the participants, we are nothing. So we have more than 1,000 participants, and we are thankful to each one of you from the court of art. Then I am also thankful to Hinesh Desai ji, Doshi Sahib sir, for coming as a rescue partner also. But what I have understood, because when I was seeing your presentation in the council, in between half a minute, you get the disturbance also, because I was connecting there. So I have found that the replies and the question answer, which must have been for us, they have been reduced by your presentation. Your presentation was excellent. You have covered merger, you have covered networking, you have covered all aspects of the various segregation of firms. And I'm also thankful to my chairman for organizing this webinar and also giving the opportunity to all of us for this particular. I'm also thankful to Payal for the purpose of moderating and taking this post very firmly and holding this particular moderator participants are thankful to you also, and I'm also thankful to the office where the committee, our secretariat, everyone. I'm thankful to the institute president, vice president for allowing us this opportunity. Thank you very much, and we hope you have liked it. If you have liked it, do write to us. If you have some comments, if you have some complaints, do write to us. Thank you very much.
Thank you, dear participants. Please, we are welcoming your suggestions on aggregation. We are welcoming your feedback. We are welcoming your criticism. Whatever you want to say, you are free to say. Just send your mail to the our क्या है अपनी mail ID cacaf@icej.in. You can contact me. You can contact Sanjay sir. You can contact our real leader of the committee, Parul Goyal, for your any work, and I can assure you all are here to help you. So if you want to aggregate, we are most lucky and we welcome you on this endeavor of yours. Thank you very much. Thanks a lot. Over to Payal for the just completing the session, concluding session.
Yes. Thank you very much, sir. Thank you, everyone and all the participants. And we are very grateful for our speaker to tell us about so interesting facts. And so we conclude the session with all the best to everyone and hope we gained knowledge from it. Thank you, everyone.
Thank you.
Bye-bye. All the best.
Thank you, Vice Chairman, for giving me this opportunity. Thank you.